this session we are learning about profitability ratio, return on asset. So profitability ratio measures the profitability or the operational efficiency of the firm. This ratio reflects the financial results of the business operation. The results of the firm can be evaluated in terms of its earning with a reference to a given level of asset or sales or the owner's interest. Therefore, profitability ratios are broadly classified into three categories. One is profitability ratios required for the analysis from owner's point of view, profitability ratios based on assets and investments, and profitability ratios based on sale of the firm. Okay, so this return on assets is a profitability ratio based on assets and investments. Okay, so what does it reflect is for the given level of assets or investment, what is a profitability percentage that we are getting. Okay, so that is a return on asset. Okay, the profitability ratio in case of return on asset is measured in terms of relationship between the net profit and asset employed in the firm to earn that net profit. Okay, so return on asset is calculated in three ways. Okay, so ROA we call it. Return on asset is equal to net profit after taxes divided by your average total assets or net profit after taxes divided by your average tangible assets or net profit after taxes divided by your average fixed assets. Okay, so what does that mean? Average total assets. See, if you see, the numerator is same in all the three cases, only the denominator is changing. Okay, so what is the average total asset? Average total asset is fixed asset plus net current asset. It does not include fictitious assets, okay, like miscellaneous expenditure to the extent not written off or accumulated losses. Okay, it is not included in average total asset. Now what is the average tangible asset? Average tangible asset means total fixed assets minus intangible asset. Now what is the intangible asset? Intangible assets means goodwill, then copyright, patents, etc., which cannot be felt by a touch, are all intangible assets. Okay, then net profit after tax divided by average fixed assets. So here average fixed assets means all the fixed assets or the capital assets of the business. Okay, that includes both tangible and intangible asset. Okay, so basically this ratio, return on asset, will reflect what is the return on the total amount of assets invested, whether it be a total average total assets or average tangible asset or average fixed asset. Now in this case we are taking average total assets or average tangible assets or average fixed assets because the assets keep on changing throughout the year. That is why, to have a realistic approach or view, we are taking average. Okay, now let's see one example and calculate return on assets. So now in the books of XYZ Company Limited, balance sheet as on 31st March 2017. Okay, then you have particulars, current year amount total, previous year amount. Okay, the first is sources of fund. In that you have owners fund, so 40,000 equity share at ₹10 each. Then you have 10,000 8% preference share at ₹10 each. Then reserves and surplus. Then total of owner fund, current year is 9 lakh, previous year it was 7,50,000. Then borrowed funds, 10% secured from ABC Bank, 10% secured debentures, unsecured loan. So current year total is 3 lakh of borrowed fund. Last year total was 3,20,000. So total sources of fund is 12 lakh and 10,70,000 respectively for the current year and the previous year. Then application of fund. Application of fund, in that you have fixed assets, that you have goodwill. So goodwill was 1 lakh for the current year, and previous year it was 1,20,000. Then gross block less accumulated depreciation, net block, that is tangible assets. So that comes to 3,50,000 for current year and 4 lakh for the previous year. Investments 3 lakh and 1,50,000. Then current assets, loans and advances, in that we have inventories 1,90,000, sundry debtors 1,50,000 and 1,30,000, cash and bank balances 1,50,000 and 1,60,000, loans and advances 1,75,000 and 1,60,000. So total of current assets for the current year is 5,25,000. Last year it was 5,40,000. Less current liabilities and provisions, sundry creditors 2 lakh and 2,50,000, provisions 25,000 and 50,000. So net current assets for the current year is 3 lakh. For the last year it is 2 lakh. So profit and loss account debit balances 1 lakh for both the years. Then miscellaneous expenses, to the extent not written off. Okay, so it is 50,000 and 60,000. So total application of funds is 12 lakh and 10,70,000. Net profit after taxes during the year is 1,50,000. Now we'll calculate return on assets. So first we'll calculate return on asset considering the total assets of the company. Okay, so the formula is net profit after taxes divided by average total assets. Okay, so let's find out what is the average total assets first. Return on assets, total assets. Okay, so let's find out this. So total assets will be fixed assets plus investments plus net current assets. Okay, so let's see how much is the fixed assets. Okay, fixed assets is, so average total assets will be equal to what? Fixed assets. So fixed assets means fixed assets will be intangible as well as tangible assets. So for the current year it is 1 lakh plus 3,50,000 net block. Okay, so 1 lakh plus 3,50,000. 1 lakh plus 3,50,000 plus your investments is 3 lakh and net current asset is 3 lakh. So plus $3 lakh plus 3 lakh. Now this is for the current year. Okay, plus previous year total assets. Previous year total assets is how much? Goodwill is 1,20,000, net block 4 lakh, investment is 1,50,000, net current asset 2 lakh. So 1,20,000 plus 4 lakh plus 1,50,000 plus 2 lakhs. So 1,20,000 plus 4 lakh is net block plus 1,50,000 plus 2 lakh is net current asset. Right? Now everything you have to divide it by 2 since it's average for 2 years. Right? Divide by 2. So this comes to 9,60,000. Now return on asset is your net profit after taxes divided by average total assets. That comes to net profit after tax is given here. How much is that? 1,50,000. Okay, so 1,50,000 divided by 9,60,000. Okay, now we have to calculate it in terms of percentages. So I am multiplying it by 100 to 100, so you get 15.625. okay, so your return on asset is 15.625, okay, on your average total asset. Now return on asset on the fixed assets. So fixed assets will include all your tangible plus intangible assets, right? So let's first calculate what is average fixed assets. Okay, so average fixed assets for the current year, okay, 1 lakh is a goodwill plus 3,50,000. So 1 lakh plus 3,50,000 for the current year, 3,50,000 plus for the previous year. Previous year is goodwill is 1,20,000 plus 4 lakh net block. So plus 1,20,000 plus 4 lakh. Okay, so entire thing we have to divide it by 2 since we are calculating average of 2 years. So that comes to 1,50,000, 4,85,000. Okay, now return on asset. Okay, net profit after tax is 1,50,000 divided by 4,85,000 into 100. So that comes to 30.9278 percentage. Okay, now we'll find out return on asset on tangible asset. Return on asset on tangible asset. Okay, so tangible asset amount is directly given, so we'll calculate net profit after tax divided by average tangible assets. Okay, net profit after tax is 1,50,000 divided by what is our average tangible assets for 2 years. We'll calculate it. Average tangible asset is 3,50,000 plus 4 lakh divided by 2. Okay, so it is 3,50,000 plus 4 lakh divided by 2. So that comes to 1,50,000 divided by 3,75,000 into 100. So that is 40%. Okay, so return on assets on tangible assets is 40%. So this is the way in which we calculate return on asset. So basically it implies that how much assets are being efficiently utilized to generate a profit in the business. Okay, so that's all about return on assets. Thank you.